And we back bonus video. Sorry for all the ticker on videos. I love ticker on, but I'm almost obligated to do those videos. So I kind of fall off doing my regular videos, which I'm going to get back onto again. Here's a cool layout I want to share with you. This was created by the guy in Investors Haven Discord. Where if you followed me before, if you don't know, there's a lot of gamma exposure charts that are there in Investors Haven Discord. I'll show you right now. You get a chart like this. I don't like that. That's dumb. You get a chart like this where you can get the gamma exposure of a stock. So in this case, it's SPX for Monday, and you can see where the gamma exposure is. So positive gamma on the left, negative gamma on the right. If you understand any of that kind of stuff. Anyways, the guy that created this chart here created this chart, which is going to be your volatility chart. Trying to read how to use this. I've been practicing with using this for a while, and it's very useful to understand the dynamics of what is happening in the vol space, essentially. And what you're looking for here, from what I understand, so don't take any of this as gospel, but what you can see is the realized volatility in this white line. And then you've got the different term structures as far as, the 9-day VIX, the regular VIX, 3-month, 6-month, 1 year. Okay, so a lot of times what happens when the market gets all wonky and everything, these go into what they call backwardization. So, and that just means that, okay, so the 9-day VIX is above, say the 9-day VIX is above the regular VIX, above the 3-month VIX. That just means it's backwardized. And that just means that there's volatility. There's a lot of volatility in the short term. Traders are hedging in the near term, so you can expect some large swings to the downside. And so this is what you see. And so when you see that sort of normalize, which is interesting, we saw realized vol go up here, but it's a little bit of a divergence here with the rest of these. But when you see this, basically what you can start to glean on, are we in sort of a melt-up situation, or are we getting to the point to where things are getting fragile again? People are getting scared. People are hedging again. Okay, so using this chart, I'm going to leave this in the description. I think you guys can can't copy it just unless you can use all these indicators, but you guys can just use the charts. I'll leave this in the description. I don't think he would have an issue with that. So down here, what he's done is he's got the VIX minus the VIX 9-day, VIX minus the 3-month and the 1 year. Then you have the SPX behind there, and then you got the VIX behind there. So this will kind of give you an idea of the spread here. So if we're looking at backwardization, we want to know what the spread looks like. We see the VIX minus the 9-day has been rising. You can see what happens every time that rises, and then it kind of tops out here. But when that happens, we get this melt-up type situation here. So once we want to see these type of situations where the market starts to roll back over again, and you can see just kind of the market behind here as it's just kind of doing this move here. So we're in this situation again where this, who knows, is this going to come back down again, and then we start to roll back over. But as the spread is up here, then you get the VIX minus the 3-month. Again, same situation. We're looking for the spread. The wider the spread, technically the better, as far as that goes. And so these are in alignment here, where you got the 9-day, 3-month, 1 year, and then you got your VIX behind there. You got SPX coming up. So it's a really nice little chart there to kind of visualize how this is interacting with VIX and SPX. Then you've got the put-call ratio here, a moving average, and then again SPX behind there. So put-call ratio coming down. Here's your moving average. So while we're below here, that means there's not a lot of people buying. Not a lot of people buying puts right now. People aren't really that scared. So you can see how this came down. It's been coming down. Where that bottom was, there's that divergence. Okay, so I mean, it's just not a science here. It's sort of an art to reading this kind of thing. And really, you're just trying to just use different factors, a weight of evidence kind of approach here. That's my method, is just using weight of the evidence. So if I'm seeing put to call ratios coming down, it means that fear is going down. If I see these spreads going up and they're normal, I see everything's kind of normalized here. This realized vol is interesting, but so we'll have to keep an eye on that. It's coming up to some resistance here. Then you got a divergence here on the VIX minus, VIX 2. Then he's got a little bit of a Bollinger Band on that. And then you've got the SPX divided by the put call ratio of the SPX, so that's coming down as well. So you can see there's a little bit of a spike here that ended up being the bottom. We're coming down here, so I imagine there's volatility coming in the near future, but as of right now, it's headed back down. So in the near term, I expect more upside. Technically, just by looking at this, I can tell that the market is in sort of a melt-up mode. Even hindsight's 2020. I was saying this on Monday in the Discord. So, and that was even before I even looked at this. But looking at this, it just becomes clear. That's what it was. We were just kind of going into this buy the dip sort of scenario, and that was only clear to me because TLT was being bought like crazy, which TLT should have crashed. But they're holding that thing up with everything they got, as far as I can tell, to keep those rates down. Okay, anyways, that's the video here. I'll leave this link in the description. Hopefully you like this. If you do, let me know. Peace.